Hello guys, welcome to a Train Parrot. I'm gonna do a quick update. As you can hear, I'm already relaxing and chilling, but I can see that a lot of people are in pain. A lot of people are looking at the charts and getting freaked out with this move down. Well, this is just the typical into Wednesday CME gap close that we already had the past week. As you can see, we are halfway through filling the gap. On Binance, we pinch 112.3, but to close the full gap, we need to really go into 110.867. That is more or less on Binance the price. Of course, in premium is slightly higher. But I want to go through the 4-hour, the daily, and I want to see what's the damage. And then I'm going to look at CPR model as well, because we are about to end the month. And I think it's worth having a second look. Let's start with the 4-hour. Let's load this beauty in here. Look at that. So we did a retest, right? So we did the breakout on the last layer towards the top of the range of 84. And we said on the 4-hour, we are allowed to come back down into 58, 57, somewhere around here. The confluence of the downwards and upwards sloping trend lines. And instead of that, we bounced off here. We did the perfect retest, but we didn't follow through. So around 5 p.m., this started collapsing into here. So we got 1, 2, 3 candles of the 4-hour. One is intra candle that is already at 48. So we already have a breakdown. The first breakdown made it to around 52, and now we are at 47. So that means that it's already confirmed the breakdown that is holding this trend line that comes from 28 all the way to 59. So 30 points up and a breakdown. So now we are due for potentially, this is expanding. So it could be a fake out to the downside. I want to cover that as well anyways, but we have to confirm that this move up has already faken out. We already had that hiccup around here. We expanded the channel, and this guy on the 4-hour continues to misbehave. So the question is, the most common question I'm getting at the moment, if we close the gap at 110, should we buy that dip? And let me see. So on the 4-hour, we lost that support. We are coming into, let's say we go into 110.8. That is a bullish order block. We have this big volume in here, and what needs to really hold is 111.3 on a 4-hour closing basis. We are allowed to pinch down into even 110.8 to close fully the gap. But then we must use this bullish order block in confluence with the point of control of 111.4 to close above that on the 4-hour. Otherwise, the damage is just too big. Remember that breaking down this trend line on the RSI, that is the most bullish support. So we are allowed to go in here, but on the price, we need to defend that point of control. We need to defend the order block of 110.5. Otherwise, really, we don't have anything to do against the ABCD pattern that can send us back down into 107. At 107, the damage is so intense that it makes this move up, the whole ABCD up, to look like part of a dead cat bounce. Sorry, I'm doing this update from the phone. If you don't like it, you can watch a big channel of 1 million followers and get to do something that is going to dig a big hole in your pocket anyways. So I think that CME gap must be taken with caution. We need to close it. Yeah, that's healthy for upside, but we need to do it very quickly and show strength immediately after closing it. Okay, let's see what could be the damage on the day. Much more important than the 4-hour. So 4-hour is full of noise. So in here, we got a rejection on the neckline. I say this level is tough to beat. We got a distribution going on in there, and we are coming now for the daily support. The daily support is currently at 47.87. That is the trend line of most bullish support. The global support is at 35. That is an RSI in terms of price. That is 103. So if you really, really are itchy to take a long from the CME gap, you could enter anywhere from the middle of the CME gap into 110.8, find a first order there, but then be willing to be wrong and potentially need to average down from 103 and below. That could be a second order if we hit the daily global support. We might need to use that 35 or slightly lower to average down to rescue from an initial bad entry potentially, right? I also wanted to cover the CPR because the CPR in the month of October, where we are, testing these current levels and coming back below and putting a daily close below this looks a lot like a second rejection of trying to reclaim the pivots. And that could spell a bad, ending on this, because it could mean that we're going into 102.2. Why? Because we did all this effort into here, and now it's looking like a dead cat bounce. If we go to that, there is no liquidity there. So really price might want to put a low into 101, slightly below the second support of October. So this is not a forecast. This is not a video about we are going to 103, we are going into 102. It is a video for you to recognize that if you get itchy to enter on the CME gap, what is your risk? So either you're going to handle this with a stop loss somewhere, or if you're going to need to average down, what are your choices in here? Because a dead cat bounce like this from 102.5 into 116, coming from the all-time high, the bare minimum it can do is a new lower low, but it can even get into 97 because that is the next support on the CPR model for this month. So you have to handle risk between 103 to 97 at the very least, and that is considering just the daily time frame, not even the weekly. On the weekly, we need to talk about 80s and stuff like that if this was, hypothetically speaking, the end of the cycle. I hope the video is not too much doom, but it's a little bit more into protecting people that are trying to desperately in need of entering in a long. I don't know why. I'm not that desperate, really. I might enter at the CME gap with a very small position, but if I don't, I'm not desperate, really. I hope you are feeling now more informed. If you do, hit the like, subscribe, write down a comment down below, and I'll see you in the next one. Bye-bye.